Oh man, I'm bored. It's about 1 o'clock. Um, about what I said in the last episode. I thought I was gonna go to sleep. I didn't. It's 1 o'clock now, so this is episode 13 of the. I'm doing serious, man. I gotta get more professional. Because I swear, if I get to like 50K subscribers and I'm still acting like this, my subscriber count is gonna drop. Anyway, this is episode 13 of the Archive series. In this episode, we're gonna be going over a decently strong fair value gap alternative called the balanced price range. Some may call this just an inversion fair value gap, but I wouldn't necessarily say it's false, but it's just the way that price inverts it. It's very, very simple. So, in short, the definition for a balanced price range is price simply offering buy side and sell side delivery. Okay, that's literally it. But it's the way it does it. You're gonna see what I mean by that in just a second. So price can, for example, let's grab my little tool, whatever it's at, yeah, the brush. So price can drop progressively, right? And then it'll retrace super, super slowly, offering that buy side super, super slowly, super, super slowly. Some people would say, oh, that's a balanced price range, right? No, that's not a balanced price range. We need to see it do it, not continuously, but like in an instant, kind of. So it needs to be something like this, like a straight V, like straight down, straight back up. That's what it needs to look like. It needs to be sell side delivery, and then guess what? It offers the buy side delivery for all the imbalances within that range. So that's what a balanced price range is. Now, I think there's about two forms of this. Yeah, there's two forms of the balanced price range. Literally, when price is just moving back and forth, up, down, up, down, up, down, up, down, up, down. That is a balanced price range. Some may say, oh, that's just a consolidation. When we say balanced price range, it's not just a consolidation. We mean, I'll show you in just a second, but if it was a consolidation, it would look like this. That's what it would look like. You want to zoom in? That's what it would look like. Right there. That's a consolidation. But if each one of these swings here was 200 points or 50 points or 80 points, some decently large move, it would be considered a balanced price range because price is moving very quickly, offering buy side and sell side during a kill zone in which the volatility is higher. You know what I'm saying, right? So that's what I mean. Here's one example here. This is dealing with fair value gaps. The fair value gap example of a balanced price range, as you know, with a bullish fair value gap, what is only being offered? Buy side, right? And with the bearish fair value gap, what is only being offered? Sell side, exactly. So with this one example that I marked up here, let's delete that line. We have a bullish fair value gap right here, and then a bearish fair value gap right here. You're probably like, okay, it offers buy side, then it offers sell side. What is the level of the balanced price range? Excuse me, I have to, burp a little bit. What will be the level that we refer to as a balanced price range? Now, since this is the fair value gap that is within this one, or mostly within this one, we would refer to this one. But how? How would we refer to this one? You're probably like, isn't it obvious? We just do the fair value gap, right? Well, not really. Okay. This is the end of buy side delivery right here. This right here, that's the end of buy side delivery. What is the end of sell side delivery according to this fair value gap? It's this right here. It's that right there. So from here to here is what? In between that range, what is that? Is it balanced or is it imbalanced? It's balanced. Why? Because guess what? Buy side, buy side, buy side delivery. And guess what? Sell side delivery. That stops right here. But this fair value gap is within it. So would we just highlight the fair value gap as a balanced price range? Or would we do where the buy side delivery ends to where the sell side delivery ends, which includes the fair value gap? We would do this instead. End of buy side, end of sell side. And how we are referring to the end of sell side is using this fair value gap. Because fair value, whoa. You know what? We're going to keep that in. Fair value gaps is very easy to see how price delivers. If it delivers bullishly or if it delivers bearishly. It's very, very simple. So when you see a bearish fair value gap, what is it delivering? Sell side delivery, obviously, right? And since this fair value gap is within this buy side delivery here, all this is just buy side and then sell side. Is this fair value gap within this buy side delivery here? No. So the balanced price range, or the range as actually balanced, would be the top of the bullish fair value gap here, which would be the end of buy side delivery, to the end of sell side delivery, which is what? your balanced price range. Whoa, pretty nice. Does price ever hit it? Oh, wow. Actually, price did hit it. I pulled over thinking price never hit it, but yes, it actually did and dropped lower. But obviously, this is the end of the day, so price isn't going to go. Never mind. It actually did go somewhere at the end of the day. So, how much was that? About 50 points. Hey, that's money for someone. Someone could pass a prop firm with that. But hey, I wouldn't trade at this time. I would not be trading the final hour macro because it's just too risky. Only under certain conditions I'll trade the final hour macro whenever PM session consolidates or just the whole AM and PM session consolidates. That's the only time I'll trade the final hour macro. But as you can see, price does hit that balanced price range, respecting it to the what? The bodies. Whoa, and even when the wicks dig into it just a little bit, what do they respect? The equilibrium and the lower quadrant. Whoa, pretty cool, isn't it? I know, really, really cool. That's just one form of the balanced price range. That's just one. What we're gonna go over next is the one I was talking about earlier. This right here. Boing, 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 boing. That's what we're about to go over. So, it's gonna be pretty fun. Where is it at? I think, yeah, here it is, right here. I'm gonna hide this real quick. Oh, no, I'm not gonna hide. I don't need to. But this is it right here. You already see what I'm talking about, right? So, when does volatility start? 9:30. You see it right here. See that? Look at the bottom of your screen. See it down here? It says 9:30. Right there, it says 9:30. So, since we're at a volatile time and price, what can be created? When price is moving back and forth, constantly offering sell side and buy side delivery, what can be created? A balanced price range. Now, if we, for example, draw up, that was a very uppish up. Hold on, let me redraw that. Up, down, up, down, up, down. See, now if I just hide the candles, right? If I can hide it real quick, hold on. Hide. You see? You see how the drawing looks? You do see that, right? Up, down, up, down, up, down. It's constantly offering buy side and sell side delivery at a volatile time. See it? You do see that, right? And what I mean by volatile time, it's not necessarily based off of time. It's just that price is moving quickly, okay? That's what makes it a balanced price range, is whenever price is moving quickly, like at a high magnitude, but it's consolidating. That's what makes it a balanced price range. So let me turn this back on. You see how price is moving very quickly? Quick like and with high magnitude? Like, just look at this candle here. 50 points. This move here, if I can do it. 50 points. So price is moving at a high magnitude while consolidating. That high magnitude is what makes it a balanced price range. So if we turn the drawings back on, you see what I'm talking about. So how would we refer it as a balanced price range? Like, what would be the level to use, or how we draw it to, you get what I'm saying, to actually refer to it as a balanced price range. In this case, for this type of balanced price range, you want to use the deepest body to the highest body. That would be here to here. That is your balanced price range. That right there. Yep, that is your balanced price range. Once price leaves this, it can come back into it. Does it do it? Well, let's go ahead and draw it down and see. Let's see. And we're gonna add the these things right here. We're gonna add those things. Let's pull it over. Oh, whoa, pretty nice, isn't it? Whoa, goes a little deeper into it, and if we drag it out, hold on. Wait a second, guys. Hold on. Give me a minute here. Whoa. Whoa, pretty nice, isn't it? Pretty cool. Now you want to draw it over even more and pull this over. If I can grab it. Oh, there we go. Finally got it. Then we pull this over right here. Price kind of disrespects the equilibrium, but I wouldn't say disrespect, because just look at how it touched it. One touch here, drop down. It went through it here, but just look at how it stayed at the equilibrium. It didn't necessarily shoot through it, but it stayed at the equilibrium. And even when it hit the upper quadrant, do you know what happens at quadrants levels? Do you know what happens there? PD arrays are created. And if a quadrant level is respected, the PD arrays that are created at a quadrant level should be what? Respected. Whoa. Whoa. Crazy, isn't it? Guess what? Watch this. We're going to dive into this real quick. Quadrant level is hit right here. Boom. What do you have here? Order block. Rejection block. Uh-oh. JJ's cooking. Does the order block get respected? We'll split it out. Oh my god, it does. Wait a second. Hold on. Wait. Let JJ cook. Did the rejection block get respected? Oh my god. To the tick? Are we serious? Are we serious? Are we serious? Do you see that, right? Whoa, yeah, I know. ICT is pretty powerful. Some people clown on it, but hey, I'm enjoying every bit of this precision. I'm not gonna lie. And then we hit the quadrant level once again. If I pull this out, you can see that we hit it once again. So what happens again is another PD array is created. What is that? A propulsion block. Whoa, does that PD array get respected? Yes, to the tick. To the tick. Insane, isn't it? Yep, to the tick. How is this a propulsion block? Let's see how. This is the deepest up close candle that visited the previous order block, or the order block that was right here. See that? Between those two candles right here. 1, 2 candles, those entire 2 candles, draw that out. That was the deepest up close candle that visited, you know, that order block there. So that entire candle would be the propulsion block, and as you can see, it gets respected right there to the tick. Wow. Wow. Yeah, you can go ahead. Just let that sink in. I don't know why the sink is always outside, but yeah, go ahead and let it in. We can go ahead and delete this now. That was, pretty good example, honestly. I think I taught that pretty well to you. Now, here's another example of a balanced price range. Well, no, I marked this just to show you the fair value gap version and how it shouldn't look. Okay, this is how it should not look right here. I think I marked. I don't know why I marked this, but we're still gonna go over it. Okay, so we got this bearish fair value gap here, and then we have this bullish fair value gap here. See that? Bearish, bullish. I don't know why I marked it, but we're still gonna go over it. It doesn't matter. I marked it for a reason. So, since we have sell-side delivery and buy-side delivery here, where is the balanced price range? In between these two fair value gaps. This fair value gap is right here. This fair value gap is right here. So which one would we use? We would use this right here. That right there. To, listen here, to this. Because from this point, or within this range, that is where both fair value gaps are truly inside of each other. So within this range here, buy side and sell side has been delivered. Do you see what I'm talking about? Hopefully you can see what I'm talking about. So if we highlight both fair value gaps, just to make this easier for you, if we highlight both fair value gaps, right? You see that range right there? You see that? See that right there? That little area right there? That is the balanced price range. Just to make it clearer for you. So wherever the two fair value gaps collide, or basically overlap, that is your balanced price range. That right there. That's your balanced price range. Pull that out. There's the balanced price range right there. Yep. Well, I swear I might be retarded. Anyway, price drops down below it. Does not violate it. It doesn't violate it. Its violation will be below this low. Didn't get violated, did it? Nope. So price pulls back up. Let's throw this out. Pulls back up. Body stays within it. Body stays within it. Wick below it. Wick, both touch, and then it jumps higher into that upper quadrant of that other balanced price range over here. Oh, pretty cool, isn't it? Go ahead and look at it for yourself. This is pretty nice, isn't it? Very, very clean. Okay, just because I'm highlighting these levels within these areas, that doesn't mean trade it. Just gonna remind you, I have to say this because some people will take this literally and say, oh my god, wait, that means we can trade consolidations? No. Do not do that. Do not do that. Please, I actually beg you, don't do that. Please don't do that. And then we have 2 more examples here. You know what? I might as well go over both of them. I think this one was on the 5-minute, so we're going to go over this one first. And here's another one of those back and forth examples. And this is that. You see that high magnitude? See what I'm talking about? Up, down, up, down, up. So, deepest body, well, lowest body and highest body would be here to here. Whoa, nice, isn't it? Guess what? Price leaves the balanced price range here. It finally leaves it, dips back into it, expands. Dips back into it one more time, reaccumulates, jumps higher, creating relative equal highs here, and then there's relative equal lows here. Guess what? Price drops down, purges sell-side liquidity, hitting the equilibrium of this balanced price range. You want to see it for yourself? Sure. I'll pull it up for you. If I can even get it, Jesus. And then if we pull this out, whoa, you do see that, right? You see it, right? See that respect to that equilibrium? Very nice. So we left relative equal highs up here. We purged sell-side liquidity. What is that indicating? So we purged sell-side liquidity. We hit the equilibrium of this balanced price range and respecting it, closing above the upper quadrant while leaving relative equal highs here twice. A set here, this high, and then this high, this high. So two sets of relative equal highs. We got buy-side liquidity up here. Does price rate it? Yep, it does. It does run into it. You see? You see what's going on here? You see all the confluences that are right here? Oh my god, wait, this is at 3 a.m. London? When it's consolidating like crazy? That means I can trade this and pass my profit account in another 30 minutes? No. Bro, some people actually think that. Just because price is moving does not mean you can make money in it. Okay? That's why there's time and price. You're probably like, but the time is there. This is London session, right? You can trade this. I mean, yeah, that's if you live in London. You live in Texas. You live on Wall Street, bro. Come on. Anyway, enough of me acting stupid. Let's go to the next example. That was on a 5-minute. I think it was on a 5-minute at least. Let's see. I think so. Yeah. It was on a 5-minute. Here we go. So we got this bearish fair value gap right here. See that? Bearish fair value gap. Then we got this bullish fair value gap. Oh, pretty nice. So let's draw both of these fair value gaps just to make it easy for you. Boom. And then, let's see. Bam. See this? What will we choose? How would we draw it? You're probably like, oh, obviously you know what? We're keeping that in. I'm not editing that out. Obviously, it is this entire fair value gap because this entire fair value gap delivered buy side within this fair value gap. Yes, you're actually correct. Yeah, you're actually correct. Because this fair value gap here overlaps this entire one here. Or if you want to, refer oppositely, it's the same thing. So you got sell side being offered here, and then we have buy side being offered inside of this buy side imbalance. Okay, I mean not buy side imbalance, but buy side inefficiency. There's no buy side here. So price offers buy side within this area. So in this area here, what is created? What is balanced? Price. Price is balanced within this area because it offered buy side in a area that is inefficient of it, which is this bearish fair value gap. So this is a what? A balanced price range. Pretty nice. And as you can clearly see, price hits it 1, 2, 3, accumulates, jumps higher. Whoa. Now this, you can trade this. You can trade this because this is pre-market. There's certain conditions in which you should trade pre-market. I don't trade pre-market that much, but if you would have traded this, it would have gave you about a nice 70-point move. You probably wouldn't have catch all of it because you don't know where price is going, because if I scroll out, there's literally nothing else. Like literally, that right there is their all-time high. So you will just be riding price to the void. You'll be riding price to the void. But you get it. Hopefully you understand balanced price ranges by now. But enough of me talking. I gotta go to bed, which I probably won't because I just want to knock out all these videos. Like, look, I'm so close. We're right here. We're right there. I got 4 videos left. I might as well knock it out before 3 a.m., right? Might as well. But anyway, this is enough of the episode 13. I hope I gave you a decent amount of examples so you can actually learn the balanced price range. And I hope this was insightful to your trading. And I'll see you guys in the next episode. Good luck and good trading.